Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 4th. Today, Thursday, the most important data that we got today is initial jobless claims for March, and it came better than expected. Remember that Fed and markets are waiting for labor market to really cool down, and that means more people jobless and claiming jobless claims. So 221,000 was higher than the previous 212, and we were expecting a little increase. So this is a check in the right direction, but jobless claims in the continuing way came way lower than expected. So a miss and a hit. I mean, that's basically flat, I would say. But the market spiked up a lot due to this at 8:30. But right now, after all these Feds are talking, Goldsby, Barkin, Meston, right now Goldsby just said that inflation has went down sideways. The sentiment is that inflation is not yet under control, and he thinks to himself that maybe, perhaps, they don't want to rate cut, they don't want to rate hike, so there will be no rate cut at all this year. This is Goldsby. Barkin also saying that he needs to see more cool down on the housing sector. And I mean, look at these mortgages. 30-year mortgage at 6.81, also increasing for 6.79. So I think this market got a little bit too crazy with the initial jobless claims. We went through one of the big levels that I was watching. Yesterday, I told you I'm not doing anything and holding intraday until this 30-minute fair value gap gets taken. That's what we did, but look at this momentum to the downside. Why? Because Goldsby basically is just denying and putting on the table that maybe there will be no rate cuts this year. And that's quite the message for the market. As I was saying yesterday, I need to see holding levels. I need to see way better price action. And as you can see right now, the Nasdaq, let's go to the 1 minute. The Nasdaq on news just skyrocketed. It took all the liquidity to the upside, and also this 30-minute inverse got run through. But at the open, and since the open, we were just basically trying to find more buyers. We consolidated and we tried again. We never took the high of day. And then with 4 Feds talking right now into the afternoon, it's basically, I mean, we are, let me just check real quick. Since the open, we are minus 0.50. We are still in the green because we were a little bit pushing during the overnight. But this kind of move, this is just insane volatility. And this is just because the Fed is still debating around the fact that maybe there will be no rate cuts, maybe. And markets are pricing in and getting crazy and crazier around the fact that interest rates are peaked and we are going to see rate cuts in June, but inflation prices are still going up. So the same way we ran through this 30-minute fair value gap inverse, we are now going lower and rejecting higher pricing. So how can we deal with this? So basically, let me just review my trade, because I took a loss on the first trade during this consolidation during the overnight. I was watching this confluence of the 5-minute, 15-minute, and 30-minute fair value gaps at this level, and I thought this was the move. I thought the initial move lower, displacement higher. I bought the pullback here for 6 points of risk, and I got stopped out on the second one. But I continue watching. I saw again the big displacement right now. So I got chopped out here. But then we went through the inverse fair value gap that we got here. And then I took a trade that I usually don't like, because after this engulfing candle, another big green candle right next to it, that means volatility and perhaps more manipulation to the downside. But I said, okay, it just chopped me out the first time. Let's see second. The second one was twice the risk, 12 points. And I was not putting the stop right down, because for me, it just was to basically seeing that this fair value gap that got tapped here, if we come down again, I mean, the trend is already invalidated. So that's the trade that I took. The target was this at that moment, this big pivot. I didn't want to just hold for this pre-market high, because that would be crazy. This market is quite punishing if you don't take the money, or if you don't think about, okay, let's take just a little bit of, I mean, this market is not trending. It's just chopping around with a lot of volatility. And I mean, 32 points after a loss of 6 points. So 26 points is basically $500. We took that, then the news skyrocketed, and look at this. Look at this. This is what is called basically Feds talking in the afternoon. When you try to hold for a trend, when a lot of Feds are talking during this time, and there's still a lot of uncertainty around the fact that interest rate cuts maybe are not being properly timed out, or are not properly, I think the idea of the Fed was 3, that was the projection. Market took that as 100% sure. And they are trying to say, the Fed is trying to say, we need to see more data, we need to wait. And I mean, this is what happens when the market goes too much to the upside, goes ahead of themselves, and big liquidation here. I think a lot of longs got liquidated here. So let's see other markets before the forecast. Let's see the dollar, because the dollar basically is just pushing higher, but it's not too convincing. These 2 days were quite of a bummer for me. I thought the market would basically continue higher on the dollar, and the stock market will continue lower, basically diverging from the dollar. Yields are still going up. The 10-year yield is just hovering around the 4.32 that was broken. It's not super convincing, but still yields are going higher. Small caps are trying. It's actually filling the gap that we got yesterday. So let's remove the gap. The gap is already filled. And gold is still, look at this trend. I mean, gold, crude oil, commodities in general, XLE 0.21. I mean, there's Tesla is the only thing today, because Tesla has its own catalyst. I mean, Tesla is, for me, is out of the Magnificent Seven. I would focus on Google, for example. Google today doesn't have a big day. It's -1%. Meta has a really nice day, 3.34, breaking all-time highs. But the big thing is with treasuries, with yields, with dollar and commodities. And the fact that all those markets, defensive markets, are already pricing in lower than expected number of interest rate cuts, so basically higher for longer, markets are adjusting. And when the Fed talks, markets freak out. And this is a freak out. So what can we expect right now? Well, I don't have a crystal ball. I don't want to predict. I just watch some levels, some inefficiencies, some imbalances. And right now, this is too emotional. I don't know how to react to this. So I would just close it for the day if I were you, and wait for tomorrow. Tomorrow, what is true is that we tried and we failed. And we failed with a lot of momentum, with the Fed in the bull's eyes of everyone. So the Fed doesn't like the situation, market doesn't like this situation, and we might continue lower. I mean, this candle, this 1 minute liquidation is just insane. Insane. So be really careful. Be really careful. Regarding the daily, let's remove all this information. I mean, as you can see, there's a lot of liquidity up here. There's a lot of people trying to short this. Small bodies, big wicks. Small bodies, big wicks. And on the 4-hour, you can also see that. Down, high, high, slowly down, big dump, and then now squeeze and then down. So this market is just playing the all-time highs. This is super risky and super difficult to trade. And one of the things that I would like to see to really see the direction, either up or down, is this purple line. The 20 daily moving average. Right now, it's been holding pretty nice. We got a moment of uncertainty, and then we quickly push up and we made a new all-time highs. But right now, with this candle of rejection, I mean, this low down here, and we will be below the 20 moving average. That is going to be quite insane. So that liquidity is basically invalidating. Let's remove this. This is the 1-hour chart. So let's focus on this imbalance. This imbalance is the big 1-hour that we got from yesterday after the close. So during the afternoon, and from there we need to see this holding. On the 30-minute chart, it's basically the same. So I would say that this spot right here, this level at 18,334, this pivot is quite important. If we close below that, I think the next stop is 18,200 and below. This is not good. Either way, we have information. We try to go higher twice, and due to the Fed speaking, I mean, this is just way clear. So I would not buy or try to pick this for the rest of the week. Tomorrow, Friday, is just capital preservation day. And with this momentum to the downside, be really careful, because I think there's a lot of potential, more potential to the downside. We took some liquidity. We couldn't take up here. That would be super bullish. But right now, these inefficiencies are too much. And we are failing higher pricing. We are failing. And that's what the market is telling us. It's just market doesn't like what the Fed just said, and we have to adjust and react. How can we react? We have to wait for the close, because tomorrow we have a very important day. Non-farm payrolls, unemployment, and hourly earnings. This is going to be insane. Payrolls need to be lower, unemployment need to be a little bit higher, and earnings need to be flat or down. We don't want money. Obviously, for the earnings of the stocks, for the market is pretty good, but the big number is non-farm payrolls. Non-farm payrolls need to be lower. As you can see here, the consensus is 200,000. Let's see what happens tomorrow. So right now, we need to see how we close, and let's see what happens tomorrow. Be really careful. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, support the channel by subscribing. Thank you for that. Thank you for viewing the videos. Thank you for subscribing. I do this for you. I do this for myself also, but obviously I would like to share some things, my understanding of the markets, my approach, how I trade with you guys. Because when I started, I also started learning, and there's always someone that can mentor you, that can provide you with very useful information. And I would like for you to really understand that I do these videos for you. It's just to because I love trading, I love teaching, so the combination of both and the YouTube platform makes me quite easy to do that. So thank you for being with me. And if you find this channel and this video useful, thank you. Thanks a lot. Remember that trading, it's really difficult. Right now, we are in a situation that is super difficult. Risk management, it's your best friend, your best skill for your success. So focus on that and you will be successful. Stay safe, everyone, and see you tomorrow.